This is Dan Stewart, and this is your NORAM Asset Management Market Update, Friday, December 3rd, 2010. The unemployment and payroll data came out today, and it kind of superseded a lot of the other data over the past week that suggested we were in a recovery. The unemployment rate went up to 9.8%, and payroll jobs, only 39,000 were created. Analysts expected 150. That's well over 100,000 short. Futures quickly rolled over before the market opened when the data was released, but staged a late day rally because it looks like this gives credence to the Fed adding even more stimulus and buying more assets. Bill Gross, PIMCO bond fund manager, even said that the Fed probably won't raise interest rates for years. That sent commodity prices up. Gold was up almost 2%, silver was up almost 3%, and a lot of the soft commodities, they were up 4 to 6%. Cotton was even up 7%. Folks, with the announcement yesterday by court order that the Fed, in order to save the world, spent $9 trillion in bailout money, and the fact that they gave Europe $1 trillion yesterday just so the domino effect wouldn't happen over in Europe. Investors all over the world are really starting to realize this printing for money is real. Bonds are going to be dangerous. Gold purchases in China are up over 500% year over year. This is actually putting a floor under the equity markets, which is what Bernanke intended. Unfortunately, it'll only work for the short term. Now in the U.S., we had a knee-jerk reaction and sold off immediately, but had time to digest the news over the course of the day. The Europeans weren't so lucky. They actually rolled over immediately upon release of our U.S. data. Technically, the market is strong. Buying power is up, as is volume. Watch next week for follow-through. This has been Dan Stewart for your NORAM Asset Management Market Update, Friday, December 3rd, 2010.